It's the thick of the earnings season, and we have Prudent Corp management joining us on the show. As promised, Mr. Sanjay Shah, the CMD, is with us to talk to us about the earnings. Before I come to the earnings integrity, Sanjay, I wanted to get a sense. I was just reading an article this morning that perhaps the mutual fund investors have taken out almost 11,000 crores from their, SIPs as well as lump sum, redemptions which have happened in the month of December. Is this something which you are witnessing as well? There is a bit of a redemption pressure?
So I think probably we should look at what is the net amount which has been added by them to the kitty. So overall, if you are looking at on one side, 11,000 crore has been redeemed or used, or it could have been the maturity also of all put together. Against that, even only SIP book itself, we have seen new money coming in the range of 17,600 crore. So I think overall, if you look at net sales number has been very, very healthy. I don't see any kind of fatigue or any kind of what you call the fear in the mind of retail investors. They have been really strongly committed by way of investing through SIPs. So probably I always wish we should look at the net numbers and the new SIP which is getting added every month.
Sanjay, you are one of the prominent players in the asset management space now. I want to understand how have your own SIP book grown in the last 5 years versus how SIP as a category has grown in the last 5 years. I want to understand, does it appear much more structural this time? Because net, whatever said and done, it is just 3 crore unique mutual fund accounts folio number which you're speaking about right now. Even the Netflix, accounts are 3-4 times higher than the unique mutual fund accounts right now.
So I'll just give you exactly the number of Prudent, which was in March 20 and which is now in December 2023. I think the Prudent's SIP book was 250 crore in March 2020, and now we are at 650 crore per month in the month of December, wherein the number of SIP was only about 10 lakh in 2020, which is now at 24-25 lakh. So I can tell you the traction, I think the ease of investing, SIP probably established as a best way of investing, the liquidity, convenience, I think probably entire digitization story or demonetization story, everything is probably falling in line with India's growth story. So normally I always tell the people that in case of US mutual fund industry grew with the help of 401k kind of benefit, which has been given by the US government. I am telling you that the 401k moment for the India's mutual fund industry is your retail SIP, which is coming from retail investors.
Okay, point taken. But given the kind of traction that we are seeing, is it fair to assume that your commission is going to grow at a compounded annual growth rate of at least 25% for the medium term?
So I think it's a entire. So if I can tell you about my top line versus average AUM growth, more or less we believe that whatever may be the growth in my AUM, my top line should also grow similarly in the same line. However, incrementally, because the entire what you call the expense ratio is linked to the average AUM, so growth in the AUM might bring in 1 or 2 basis point lower incremental revenue, but entire book, which let's say for example today I have a book of 80,000 crore, we have a target of reaching 1 lakh crore by next 2 years, say March 2026. So incremental new money might come at a 1 basis point lower, but the current book I'm very, very comfortable that I should be able to maintain that margin. So overall, I'm pretty sure if my AUM grow at 20% CAGR, my top line should also grow similarly in the same fashion.
Okay. So also want to understand that with your asset under management growing, what kind of incremental operating leverage actually goes up? Because your overall expenses at the company level are not growing because it's all enabled by a lot of technology. So every 1,000 crore AUM which comes in, does it also, what's the proportion in which your costs actually go up?
So I think probably you are absolutely right. This is a very, very strong operating leverage story. Number one. Number two is for building this entire business, whatever is required to be spent on the technology, creating branch infrastructure, having a strong manpower in our team. So we have a team of about 1,100 people today. We have 28,000 mutual fund distributors who are working. We have almost 23 lakh SIP, which we already onboarded. So incrementally, whatever new business comes in, I think the cost aspect would not grow significantly. So we have one variable cost component, which is the brokerage we share with our business partners. Apart from that, I think the rest major cost would be by way of employees' salary and the rent expenditure. And I don't see that is going to grow significantly other than the inflation cost. So you are absolutely right. Another biggest positive point for us would be we are a hugely cash generating. So let's say, for example, in the current year, let's say hypothetically, if my profit is at 130 crore, 140 crore, my cash would be more by about 25, 30 crore, because we have about 25, 30 crore by way of depreciation. And that depreciation comes because of Carvey's assets which we acquired. That amount which we paid, we are amortizing over a period of next 10 years equally. So it's not only the operating leverage story, it's also a very strong cash generation story.
So not only operating leverage, but the cash inflows and the cash generation is also very, very strong. Thanks, Sanjay, for making time and speaking with us.